Welcome back, everyone. If you're on the pre-market prep, which definitely check that out. I'm live every day, 8:30 Eastern, YouTube, Facebook, Twitter, Instagram, everywhere. I go really fast. It's 15 minutes a day, rapid fire, and so many times I'm pointing out what I call these key levels on the chart, etc. And listen, it's fast. I go fast. So today I'm going to give you a little bit of background on the anatomy of the stock chart and why I fixate on these particular levels, and going to break them down and maybe hope to give you that kind of, again, this is Anatomy of a Stock Chart 101. Hey everyone, lead trainer with Stocks to Trade, Tim Bowen here. Be sure to like, subscribe, and share with your friends. These videos, again, I say it a lot, but really proud of what we do on this channel. Tons of content, years of information. I look back at some of the videos I did 3 years ago. They're just as useful today. Scanners, charting, like we're talking about today, breaking down fundamentals, SEC filings, order types. It goes on and on and on. Go through the archive, take advantage. Our YouTube is 100% free. There's podcasts if you're driving or if you're on the treadmill. Take advantage of all this information. And then, once you absorb it all, if you're really looking to take that next step, check out the Steady Trade team. It's a great mentorship program. I show up every day, twice a day, every single trading day. Done over 2,500 webinars. Get in there and let's get after it on becoming a consistently profitable trader. All right, that being said, let's get started and let's talk about the anatomy of a stock chart. Today in front of me, I've got GTEC. You can tell this was a huge runner today. Had some news at 8 a.m. It's a 1 million float stock, which, again, if you watch the archive, you know why we care. We got a 1 million float stock trading 60 million shares at 3 p.m., 60x float rotation. That shows you the power and why the news drops at 7 a.m. And this goes from 8 to 27 in a matter of minutes. And then had a couple secondary spikes and bounces off VWAP. Was actually a great VWAP bounce in pre-market if you trade pre-market, which I typically try and talk newer traders out of. But nevertheless, huge momentum stock, and I'm going to talk about the key levels that we look at. We're always going to start out with that red to green line, and this is or the green to red line. Those terms are interchangeable. It's the same line, and this might be one of the biggest. I'm starting with this. This is one of the most frequently misunderstood terms in charting because most charting packages by default have green candles, have red candles. You can pretty much every charting package, you can change your colors, but the defaults are almost always red and green. For a green candle is a candle that closed higher than it opened. A red candle is a candle that closed lower than it opened. Study your doji candles. We got a bunch of videos on it, a bunch of great books out there. But that being said, a lot of people, when I say red to green or green to red, they think I'm talking about the specific candle. Like say the candle gaps up and it's green and then it closes below the open on that particular, say, 5-minute or 15-minute candle, and that candle flips from green to red. No, that's when I say green to red or red to green, I'm talking about the previous day's close. And the example of GTEC, that's this yellow line here. The previous day's close was $7.55. So when the stock is above $7.55, it's green on the day. You can see it's up 120%, trading at $17. It's well above green, so the stock is green on the day. Now, let's say some news comes out or something bad happens and GTEC craters, and once it goes below $7.55, it's now red on the day, and it would have went green to red. So when I say those terms, that's what we're looking at. We're not looking at the highs. We're not looking at 52s, which are levels I'm going to talk about. We're just talking about whether the stock is green on the day, red on the day, and what that transition is, okay? And that's the big key and why traders fixate on this, because a red to green move, very bullish. The stock was red on the day, busted back green, almost always a bullish indicator. Vice versa, if you're short bias, a stock that's up big on like something like GTEC that then fails and goes red on the day, very bearish. That's a setup you look to short. So there's the green to red line. The other key levels we're going to talk about, that high a day Now we've got 2 high days you can see on this chart. Might be a little confusing, but that's why we're doing the video. You've got the pre-market high of 27.31, and then you've also got the trading day high of 26.42. So remember the market, this GTEC's a NASDAQ stock, so it started trading at 4 a.m. Eastern. That's that light gray area on the left side there. So your 27.31 was the high of the day up until 9:30 a.m., the pre-market high. Then you can see slightly after the open, it hit 26.42, which would be the high of the day during the 9:30 to 4 p.m. market day. That was actually a feature I specifically requested because I like to see both those levels, and something you'll hear me go on and on about is multiple indicator alignment. We want to line up as many indicators as possible. And what's nice about an example of GTEC, for all intents and purposes, to me, the pre-market high and the post-open high are the same. Now, I know they're 90 cents apart, 80 cents apart, but we tend to round when we're talking technical analysis. I would call the high 27, basically averaging the two. So had this dip and ripped, which it ultimately failed, it would have been an explosive move because basically everybody that bought in pre-market would be green, and then everybody that bought the market open would be green. So we can line up those levels and key on them. Then vice versa, you've got the day low on the downside. Now, again, this is a feature that I requested. I just want the overall day low. I don't really care about if it's in pre-market, after hours of the day. I just want to know what the ultimate low of the day was. Simply because I don't really trade low days, especially in 2021. It's if you're trying to bottom feed right now, change your mindset. Breakouts. But it's good to know what the low of the day is, just especially if you've got a range-bound stock. GTEC's got an enormous amount of range. We got $20 of range. If you got a stock with 10, 15 cents, and maybe you're kind of holding a little bit of a loser, and you're within kind of your stop, you're down 10 cents a share, 15 cents a share, but it makes a new low, and you get that little pop-up that says low. That's telling you something. Your charting package is telling you something. It's saying, hey, buddy, or hey, ma'am, you're holding a loser. It's 3:10 p.m. It just made a new day. Hello. It's probably time to stop out. So anyway, high day, low day are the other levels we look at. And then VWAP is always our number one indicator. VWAP currently is 2050. GTEC putting a little bit of a bounce here, kind of running out of time on the day. But if this could reclaim, VWAP would be a bullish indicator. And there's a million different technical indicators out there. We do a lot of videos on them. I say, again, right now, everyone has VWAP on their charting package. It's all anyone cares about is that level. Avoid too many technical indicators. I'm not saying they don't work. I'm not against any. Just try not to add too many. Start with VWAP and go from there. Okay, next thing we're going to start looking at is that's breaking down the intraday chart. Simple areas. Highs, lows, red to green, green to red, VWAP. That's most of what we look at on the intraday chart. So that when I say intraday, that's your 1 day, 5-minute chart. I recommend 5-minute candles. I won't get into that too much. I think a lot of people fixate on 1-minute candles too much. I think it's too much noise. But that's that intraday action. Then we're going to look at the daily chart, which is that 1 year, 1 day chart. Now, this is another thing kind of open to interpretation. You can look at a 2-year, a 5-year, or 20-year chart if you want. But the simple fact is, I think, and this is my opinion, there's no real need to look at beyond a 1-year chart because, in my opinion, 97.63% of people aren't bag holding behind a year. Okay. Now, maybe you are. You might be like, well, Tim, I've held this weed stock for 5 years now. But I think most people, when you get 6 months, 8 months, 9 months in, you start giving up. So I don't really see that much value to look at, levels from 2, 3, 4, 5, 20 years ago, because I think you've got all new traders in at that point. So what we're going to look at, very similar things. Highs, lows, and then we're going to start looking at those whole dollar, half dollar areas. And GTEC's a great example because you can see this consolidated at 8 for, well, first of all, big gap up back last fall. So this is that former runner that we love. So it ran up big and then just kind of consolidated at that 758 area for, December, January, 3 months, actually back into November, 4 months. So that really kind of gives us that basing action to show us that, that's kind of where there's indecisiveness, buyers, sellers, back and forth, back and forth. Then, we would be looking at before the big day today, notice 10, another whole dollar, half dollar, was resistance in November, December, and then it kind of tried to perk up in early February, but we fixate on those whole dollar, half dollars, and you kind of see how, with my cursor hovering there, once, twice, 3, 3.25, 3.5, little weaker bounces, but that tells you if and when 10 breaks, there's a good chance it's gonna run because no bag holders, everyone that bought back last fall, everyone that bought last spring. I mean, you can see this thing's ran 1, 2, 3, 4, 5, 6, 7 times in a year. Not bad. I mean, seven times in 12 months. I mean, that's a former runner. So once you break that level, there's a good chance that the stock can run, and it just really makes it clear on the chart. And let's say, now again, GTEC went nuts today. That's why we love low floaters. Let's say it was a little slower mover, and it broke through 10, say into that 9:45 or that noon or 2 p.m. window that we talk about. That would be your kind of breakout buy. And then you'd probably risk down in that low 8s because that would be your support level, support and resistance. And ultimately, maybe you'll have a goal 12, 14, 15 for that 3-to-1 type risk to reward. But hopefully this helped. A lot of simple levels. I tell you something, and if you watch these videos, if you listen to the podcast, I think that one of the biggest mistakes that so many newer traders make is, and keep in mind, let me say this, trading's very complicated. Very, very complicated. A lot of intricacies. Takes a lot of time to learn all this stuff. But vice versa, it's funny how people just try and overcomplicate price action, simple red to greens, simple breakouts, whole dollar, half dollars, and people ask why a whole dollar, half dollar. I mean, I give this analogy all the time. I mean, there's a reason that used car is $9,999, or there's a reason there's a book on sale and it's $13.97. $13.97 seems cheaper to the human brain than $14. It's 3 cents, but they price it $13.97 for a reason. Your brain is wired to focus on those levels. That goes back to what I was saying. Keep it simple, stupid, especially in the beginning. KISS, simple levels, multiple time frame alignment, multiple key level alignment, and price, volume, VWAP. Keep it simple. And then when you start getting more consistent and you start adding more size, that's when you can get more complicated, more esoteric, start adding more levels, because once you start sizing up, you got to get smarter. But in the beginning, small shares, learning, keep it simple. All right, everyone, have a great day. Hopefully this video is useful. Again, these are all levels I talk about every single day in the Steady Trade team and more. There's other levels we look at, but these are kind of the top 10 out of probably 15 that we fixate on. But if you're looking to learn even more, check out the Steady Trade team, and I look forward to working with you soon.